to figure out
All right.
what's going on.
So either reverses here after hours, or we gap lower, and that should be the bottom, and we go straight up.
Trailed a competitor like you.
All right, sexy guys. What a goddamn trade. What a goddamn move, baby. Gotta love it. Gotta love it. Okay. I have a video clip I'm gonna post off of my Twitch where we called it out of the setup here, that it either was going to drop here into the zero line and activate and then rip at post-market or pre-market, or it's just going to gap down and then right at the open of the day it's going to gap down and go straight up. And that would be the bottom for GameStop. And what do you know? This is how you make the realsies, the reals money. The reals money. Said by July 100 strike, you could buy 1, 3, or 6 months out, all three. It's the best way to capture everything. I mean, what to say about this? What to say about this? There's so much, so little. There's just so much to say. I don't know if I can remember it all, but I don't know if I start from the beginning or what. I think GameStop is going to break at least 250 this year. Okay. I think it should hit that 380 for alarm. When I make alarms, they usually get hit. Like the vast majority of my alarms get hit. They're very strong wave inflection points. So I think 384 gets hit. The pattern in which the market moves and the speed in which it moves these next couple of months will determine as well where GameStop goes and where it goes, when it goes, etc. And many other stocks, because there's a lot of stocks that are all reversing, like the ARK stocks and things like that. We talked about the ARK stocks bottoming and how Kathy Wood spoke on what, the 11th, the 17th right here. Kathy Wood spoke right here, and I said either it's going to be an absolute bottom or it's going to be a bottom in momentum. And if you look at it, down to the right, down to the right, and then right here it's about to go again and do another large wave lower. And what ends up happening is you're slowing down a freight trade. It's just an avalanche going down. So she spoke here at lunchtime saying this is the biggest misappropriation of funds in the history of the stock market. That's a big statement, and I agreed with her. I said that this move is unwarranted and it's pricing in a future event. And we retested COVID highs. And this is just complete obliteration. This is what you would see at like the bottom of the financial crisis. Like, complete wipeout and then some. And like this is what it did. This was fine, but then once it started doing this is like Alibaba type of blow off bottom. It was just so far. So if you look at it, crossed and then started catching a bid. So this is what it would look like if it's reversing when the MACD is so far below the zero line. So you still went lower because it's so low, but it's trying to reverse. And usually when you reverse a very violent wave, you tend to get, right, if you go up, down, the violency of the kickback is bigger than the pop because you're so far lower. So it looks like it's going lower, but in fact, it's violently trying to reverse. So you get bigger kickbacks. And that's tough to trade and it's tough to know unless you know what the fuck is actually happening. And you also have to trust yourself, right? This is like when John DeJarian said that there's more put buying going on, and so I think ARK is going to fall out of the sky, and it just so happened to be a bottom. Now we're breaking out here. It looks like a MACD cross. A lot of overbought into a lot of oversold. I also think the Russell is bottoming, so that's going to help give the memes and penny stocks a bid like it did in 2020. Another major thing that you need to remember, okay, headlines that you get in the news, on the internet, things like that, represent wave cycles in the stock market. So for example, when you had COVID happen, you were getting headlines, the worst week since 1987, the worst week, the worst month since the dot-com bubble, things like that. And what would you know? We broke a 40-year downtrend in the VIX on the sell-off since 1987. The trend break was from the 1987 top in the VIX. So when you see headlines, it represents, so it's kind of like, why then are we not, if this was 1987, why are we not down here? Because it doesn't work like that. Different underlyings and different ETFs and different products don't need to be at the exact same price of something else for it to be represented in the same wave structure. So this was it, 1987. You do the downtrend and we broke it. Broke it. And now we're retesting it, things like that. So what we got here, okay? What we got here, right here, was the best day since June of 2020. And what was happening in June of 2020? All the memes, all the penny stocks, everything was exploding. It was the prime of the meme trade, of the penny stock trade. It was the highest percentage of sub-dollar movement in stock market history. Because there was such a strong algo off of the COVID bottom, you got this. It was like the ship started its engine. It was the people were flooring the accelerator. That's what ends up happening. So when you get a headline that says the best day since June of 2020, and I also saw a potential bottom where you should get an everything rally in the coming months, that makes sense, does it not? Makes sense. So then you should end up seeing it happen. Oh, look at that. And then we literally made a video on the Fed day that we expect to see just rip, or you want to see a violent drop on the Fed day to fill the gap, and then you want to see it reverse. And to the T again. So it keeps doing what it should do if the market is bullish and if the memes are bullish as well, right? So that's a really good trigger. And then we're doing this. And then what do you know? We spoke about GameStop. Now we can come back to GameStop. A weird aside. Okay. Now we spoke about how here I wasn't sure where we would go. What I did see was a bottom in GameStop, an activation, if you will, right here. And what ends up happening is that if you activate a trend, sometimes you activate it and then it needs to go support searching. So if you just follow, like say, for example, this wave here, see how it's going down, up, and it's going down, down, down. See how it tried crossing it right here? It wanted to cross it, but it couldn't. And you can chalk it up to it needs to fill the gap on the wave 4 to create its wave 4. It's basically, it knew it was going back down. And so it does this anyway. But in this specific example, I couldn't tell because there was both big up momentum and down momentum at the same time. I couldn't tell which way it was going to break. If it broke to the upside, I'd expect it to come back down to at least the yellow line, like from 300-400. Or if it broke down, we made the video here that if this fails, something is severely wrong and you need to get out and reassess. And it did fail. And we said that in Q4, you can either get the rip or you can get a candle that looks like this. We said specifically. And what did we get? And you'd see a buy up towards the end of the candle. And what did we get? Exactly that. We also said that if that happens, you would want to see an activation in Q1 on some sort of a news, on whatever news, you'd want to see an activation. And then you have to try to figure out how that plays into how long it takes, how big is it, things like that. But we'll worry about it then at the time. And so we got the Q4 to drop. The market corrected. All these meme stocks corrected. Like stocks fell out of the sky in November. Like PayPal. Like it was just ridiculous because it's pricing in future volatility. So this happened. Now you're looking for the activation. What was the activation? The NFT. The AMC NFT. GameStop thing. That was the activation. Okay? People don't realize that. Okay? So it popped. Right? This was the news everyone's been waiting for forever. Forever. This is what people don't get. This is why headlines and news events, you need to understand how stocks move. how indexes move off of news. Sometimes news is buy the rumor, sell the news. Sometimes it's peaks or troughs in momentum. So what this did was it stopped the down momentum. It stopped the consolidation off the top, down and to the right, down and to the right, down and to the right. It stopped the down momentum, but then you get residual momentum. You don't just stop a car. You don't just stop a ship. You need to, it needs to go into support, which it did right here and violently reacted with it. And it needs to move in a certain way. And since GameStop is a very, very volatile stock, you should expect to see an overextension, as well as BlackBerry filling its gap at 5.9, which is a huge trigger. And then you see things like AMC filling its gap as well, and BlackBerry, the three main big boys, right? So what does this look like? Activates right into its previous support, gets rejected, you get the residual, and then what do you get? One sine wave, up and down. We literally called it out right here when it was doing this, and it looked like it bottomed, and then earnings was here. I said what I'd want to see is it go up to the zero line and fail, because it's very awkward and weird. If this is residual and it goes up, it's very hard to residual, go up, and then just explode. It's very hard to do that. It just is. It's just a fact. It's just the way waves move. You'd want to see it go up to the 50, which is the midpoint, the positive above 50, negative below, goes up to it, stabilizes up, which was this day. This was a very violent day. And then you get the blow off bottom. This looks like an unhealthy move. This to me looks like it's pricing in future volatility, like Amazon did, like other stocks did, like Apple did. There's a lot of stocks that did this. The indexes did this. This looks like on almost everything, it's pricing in future volatility. GameStop will go back below this. If this goes to all-time highs above 500, it will come back below this. Okay? Period. It's telling you, it's showing you the future. Okay? People don't want to hear it. I don't care what you want to hear. It is what it is. Okay? So this is an overextension. This is like it pushed itself down violently with the way it reacted. And then we saw this, the drop, and then this weird coil effect. And this is type of a bottom where you get the drop in inside coil and then the gap down and it goes up. You know what it looks like? It looked like this. I remember specifically when I saw the chevron bottom here. This is a week down, 4 weeks on the inside, and then the gap down, it goes up. When I saw this, I go, this is a huge bottom. Chevron's going to be ripping in the weeks and months to come. And then what would you know? Oil takes its thing. It's almost as if it knew. It's almost as if it knew. Shocker. It did know. Stocks always know. So it looks like that. It's the same exact thing, but just on a daily setup. Doesn't mean it's guaranteed. It's just a typical type of pattern that you may see on a very volatile blow off bottom. So that was that. And we called that this is the kickback off the zero line. So if this is bullish, if this is a trigger for the reversal of the downtrend, you get the drop into support, you get the first wave and the blow off bottom. If this is as true to form, is what I call it, this should gap down and just rip. And what would you know? It did exactly that. So all the naysayers, the Fed raising rates, talking about stocks like GameStop, the meme stocks, debt-laden stocks, companies, all these stocks should just fall out of the sky. And what would you know? Priced in. They were all set up to rally. Whether the Fed raises rates, whether the yields go up high enough, whether it actually derails companies, whether we are peak pessimism and everything just gets better from here, earnings, supply chains, the war, everything, right? You don't know. You don't care. That's the point. This is why following headlines is a fool's game. You don't understand how the stock market works, then don't trade the stock market. Stop worrying about headlines. You need to understand how things move and where and when to buy and sell things. Once you know that, headlines mean shit. They don't matter 90% of the time. Sometimes they matter. You get a headline, stocks will move that day, right? but you can't change the trend on some random news. It's hard to believe, but if, bombs go off the next week, this is not just going to randomly reverse. This is a pattern that has been set up for years. And this pattern itself set up for years, which is another reason why GameStop will go to the absolute moon in a couple of years, because this looks absolutely insane. I think GameStop will eventually break 35 to the downside, and I also think GameStop will break 1,000 after that. People are gonna have to eat a lot of shit to get the big move. It's gonna be extremely volatile, and it's not what people want to hear. It just doesn't really matter. All we're playing is the major tops and bottoms on GameStop. Where it goes, we don't care. We're not just gonna hold it forever. We're gonna trade the major tops and bottoms. So it's true to form. It activated in Q1, and so now you get this Q1 candle. You get this Q1 candle that looks really clean. Bounce off the 9 SMA, but that's not clean enough. What you want to see is a bounce off of the 50 or the 20, because that's where it exploded off of and through, right? So what this move should be this year or into next, I think Q1 2023 is going to be the top. And then we're going to get the bear market recession everyone keeps crying about. And then, so it'll be tricky, but as of right now, all that matters is that it is bullish. That's all that matters, is that it's bullish. And this move coming, okay, remember the headline, June 2020? This move coming technically outside of the headlines should be a residual move of this. Is it going to go up 14,000%? Not even close. Is it going to go up 1,000%? No. Is it going to go up a few 100%? Yes. I don't know if it breaks all-time highs on this move, but you're going to get a rip. You can tell where it's going to go based on where the market is and based on its movement. And as of right now, okay, it even gapped up. It even ripped after hours, which is funny. Again, the headlines, the stocks move when they're supposed to move. They announced that Cohen had an increased stake, and they announced it earlier, and it didn't move. And then randomly it does this. And it does it because certain candle time frames need to move at specific times. It touches the 9:30 here. Like, you'll notice that. If you watch the stock market long enough, you'll notice that news comes out one day, and then the market or the stock doesn't move until like an hour later, a day later, 3 weeks later. And like, what the fuck? This is old news. Why is it moving now? And it's like, you'll notice these things like that because the stock needs to move at specific times, and it's not exactly tied into the actual news headline itself. It's tied into the trading algorithm, the wave itself. It's pretty cool. It's pretty cool. So targets, and where does it go? I personally think that DWAC is going to possibly rip right here. There's a lot of reason for this to explode. There's a lot of the penny stocks that moved with it that looks like it's about to pop. And back in November, it spiking really high was a bottom for the meme stocks. October 22nd. If you go right here, this is where people sold GameStop to buy DWAC. And it was the first time that GameStop dropped into the 200-day moving average since the breakout. So it dropping was a bullish trigger, right? So it drops into the 200 and it activates, and then it needs to come back down and consolidate and find support, which was this gap right there. This gap there, it's filled here, but this is the type of gap that you'd revisit, where you'd want to revisit and drop into it. And that's exactly what we did. So if DWAC explodes, which it looks like it's set up to do, I think it's possible that that's a short-term bottom for a GameStop, and then it just takes off after that. Is it guaranteed to happen? No. I've just noticed that with the algorithms, that's a possible pattern. Okay? It's a possible pattern. So here we are at resistance at 142. It's right now at 148, was it? 144, 148 pre-market's at 144 right now. So we're chilling right at resistance. and also resistance was 161.18. This is a huge algorithmic print. You got anyone watching this should draw this on GameStop. This will be a magnet for the upside and downside for a couple of years, 22 and 23. And it was also here, like you could see it gapped up that day. It went up to like 170 something pre-market, and then yeah, so you'll notice that. So targets and timeframes. You want to see the March close above the middle monthly Bollinger, so 20 SMA 136. Corrections happen. You get the drop, the doji, and then the drop, and then the reversal. That it's classic correction type of setup on the monthly. Classic. It's very, very common. Okay, go back to here. 2015, the drop, the doji, the reversal, the drop, the doji, the reversal, the drop, the doji, the reversal, except this didn't go up, so it was kind of muted. And then this one was the outlier, the drop, the doji, and then the drop. And it's like, wait a second, that didn't make sense. And the way it moved and how it moved and other things made me think that this correction is not over, which is also why we shorted the top, but we didn't catch all of it. So yeah, again, so it was like an anomaly, the drop, the doji, the drop, the reversal. So that's one. It's very, very common. The drop, the doji, the reversal, the vaccine. The drop, the doji, the reversal. So it's just how monthly corrections work. It just represents like one sine wave, like one U. So you really want to see it get above 136 for the month. We're right at 144, and we're at previous resistance. So should it rip here? Not necessarily, but you want to see it hold its value, stay relatively strong. If GameStop drops again, if it drops and DWAC explodes that day, you're looking for it to drop into support. We don't know if DWAC is going to be that trigger, or if DWAC and all those other stocks are going to move with the meme stocks and they all just kind of go together, like all meme stocks are doing right now. So we don't know. It's just something to be aware of. Otherwise, we expect this to have some sort of chop. If you have shares, you are good. You do not sell. If you have options, it gets really awkward. The time frames and the strikes and things like that. I don't think it's going to be easy to just buy weeklies and profit off of it big. We'll see how forgiving it is. Another thing is this entire year, if you bought weeklies at the start of the week, you got fucked most of the year. Every time it like spiked early and then went down the entire week. So you like, it was so hard to trade weeklies if you did. I think this year it reverses that, either this year or next year, where you get strong up moves that are tradable each week, but then it keeps going lower. Like consistent up moves, but then it drops lower in total, like the end of the week or like the following week, something like that. Eventually that should reverse, in my opinion, that type of pattern. So it was like that. This might be a middle month, a middle year, and then next year it does the reverse. Yeah, eventually we got the yearly. The fact that the yearly 20 SMA appears right here on the time it explodes is like very specific. I think it's very bullish, but also it's going to want to tap that somewhere in the future for support. Usually when time frames appear like this, they like to visit it. They like to go to it, no matter how long it takes. Sometimes like this, it appeared here, so it wants to go lower, but it can't. So it goes back up, gets all the buyers in and really fucks people, and then rolls over type of thing. Sometimes it's just not an exact path. So the monthly, what do we got? I mean, we could do this. We can do this. Where are we at? We're right here. We're at 148 pre-market. So we're right on this. So it's possible, okay, because when this breaks, it's gonna go. It's gonna rip. So it's possible it goes up to it. It touches the 50 here, gets rejected, and then finds support wherever and whenever. I can't tell the exact zigzag of it. All I know is that it is bullish. And as of right now, I think the top in it will happen with a blow off top. June 8th is the next earnings. Every single earnings report it's dropped on. This one reversed, but it still dropped on the earnings. So I wonder if this earnings it actually pops on and it ends up marking a top. This is kind of right where we would expect the top, middle of May, early June-ish. So it'll zigzag. Don't sell the shares. If you're holding shares, you're good. Holding options, you're on your own. Good luck with that. But yeah, this is exactly what we wanted to see. The option candle, there it is. It broke below it. Now it's back above it. Expires in 3 weeks. The quarterly candle. It's so nice looking. It's so nice looking. Look how perfectly coiled it is. Like really clean candles. The doji, the red, the pop, it's like a perfect rounded move. And so it's finishing this quarterly candle with positive momentum after rejecting a double drop. So it means that bottom is in, and it should only top short term with a blow off move. So I think it does something like this. Goes up to there. We get the flash crash in the next sometime this year before September. It crashes back down to support. So all the people who still held on to it still make no money. So people are getting very antsy and wanting to sell the pops from now on, which is really what waves do, right? So people were never selling here, never selling, got fucked the whole year. And then it does it again and comes back down again. And they're like, fuck, man, I really need to take profit, right? And then it does something like this. And then people are like, all right, the next time it pops, I'm selling something. And so this is like the move where it's actually going to go. And then people sell as it keeps going. Like it's like the psychology and the technicals as well. So I think this is the wave 3, this is the wave 4, and then you're going to get the wave 5. Somewhere here. This should break all-time highs. This should go somewhere between 500 and 1,000, in my opinion. And then that should be the top before the actual recession, bear market. And then it's going to get really ugly. People have to sell this, guys. You got to sell it. So all in all, really, really nice here on GameStop. It's doing exactly what it needed to do when it needed to do it. AMC did too. Filled the gap. I think this super violent move here is going to be support in the future. So if this goes back up, I have an alarm at 57 here. This could be a shoulder, a head, and then the shoulder, like if this goes up, and then we get the correction in a few months, it'll be start the right shoulder, and then this would be the support. Also the yearly print. So inverse head, shoulder, and then Q4, Q1, this inverse head and shoulder plays out. And it makes a lot of sense because if the inverse shoulder plays out, it goes from 13 to 72. It goes up to around the 130, 140 print. And if you remember, this is where all the option chains went to. They maxed out at 140 and everyone was buying the 140 calls. There was a lot of psychology and algo involvement around that 140 print. So it would make a lot of sense if that actually is towards where the high is. Shoulder, head, shoulder, and then Q4, Q3. I would expect some sort of a violent drop, right shoulder, and then some sort of a violent drop to shake people out, and then you get that final rally out. Makes a lot of sense. Makes a lot of sense. BlackBerry, look at this. And people don't realize, like, it's so simple. I said it's possible that it actually came back down to here. I would not have bet on it. But if it does, it'll be the best opportunity to buy this ever. And there you go. All it is, it bounced off of it, broke through it, retested it. Yep. So you have a huge down move. Can this just go straight up? It could. It's unlikely. If it's going to stay healthy, you get the activation of this trend, which is what I'm expecting to see here. And then there's a lot of down momentum from here, which ends up getting flushed out. That's how that plays out. And once you flush it out, somewhere it finds support. And also on AMC, the yearly, look at this. There's so many things. So we'll go this. Look at that. This is one of the reasons why I thought AMC was so bullish at $2 when it activated. But I said, if this is true to form, this thing is going to rip over $20. And I was like, there's no way. And who thought that that could happen? Like, I thought the meme mania was over. No one, you just don't think that the stock would do something like that. And yeah, of course. So me thinking that stocks are not that stupid was the reason why we literally didn't buy it when it was so obvious. It's rare. So if there's huge down momentum, explodes up, consolidates this year, and then accelerates the next year. That's what this looks like. Activates, this is residual momentum of this, and then activates this year. And then this should go up to the 0 line, and then it should start diverging negatively in 23, 24, 25, and then sets up for the big short squeeze. Once the market corrects like that 50%, if it does this, and then this comes all the way back down into 24, 25, 26, it's going to be retesting negative MACD on a yearly basis. After exploding to the upside, all it's doing is one sine wave, up and down. So it's reversing the down momentum here. So you break out, finally got rid of this. Now you're retesting to the downside. And when you reject that retest, you get a continuation wave of this, which would be absolutely fucking monumental. But this would be like at below $5. The retest here would be like all the way down here. So people are going to know what the fuck they're doing, and things like that. And it's going to feel awful. It's going to be down here for a long time. People are going to give up on it. Like, they're going to say, oh, this was the move above here. You should have sold. You're an idiot, blah, blah, blah. And there's going to be so much pessimism. And we're going to be able to time it because we see this. We see it. It's going to be a story written for the ages. This is going to be a story literally written for the ages. Your kids' kids and kids' kids will talk about it. It's going to happen once a lifetime. I don't think this will ever happen again in our lifetime. Maybe towards the top of the stock market in like 15 years. But this is, yeah, once or twice in a lifetime type of stuff that would happen. So this is AMC, and then there's BlackBerry also as well. It broke the uptrend, but then it goes into horizontal support, horizontal gap. This is classic, like a volatility stock where it breaks one trend and then goes into a gap and activates. Cannot believe it actually got here. This is such a friggin' buy. It literally went to the dime. Such a buy, like holy crap. Such a buy. Weekly MACD cross. Oh my god, this is about to happen. That's gonna cross. Kind of looks like Mullen. And a lot of stocks want to get this weekly oversold print. Don't know why. Pricing in something in the future, but it just represents one sine wave, up, down. Looks awful, feels awful, but not awful. It literally went from 2 to 6. And yeah, just the way it goes. Get the nice little kickback. It's showing its face for a brief moment, and it should reject this. Should reject it in a violent way. What do I want to show? The yearly on BlackBerry. So this is touching the 0 line this year, but it activated last year. It may have been touching it, the 0 line, at the start of the year. And so it activates, but then it doesn't close right here. It doesn't close negative. See, that's negative. That's positive. Negative, positive. So it closed positive. That's not healthy. What you want is you want to see a close on the negative. It represents a healthy wave. So it's checking is it a negative wave or a positive wave on the yearly basis? But when you activate and it doesn't close on the negative, it's not healthy. And what ends up happening in this specific case, I've seen like thousands upon thousands of setups like this. And so what ends up happening is it activates before it touches the zero line in 2020 and goes up and goes so far so fast that it now is on the zero line. It wants to go, but it can't because it already went. So it's in like this asynchronous matter. It should go here, but it went too soon. If it just kind of chilled, it would have been able to go this year. It would never have popped as much, but it would have been able to pop this year. So what you would expect to see, from my experience and what I would expect to see here, is I think it's going to violently spike this year and then consolidate back down. So you're going to get the negative print and it'll be ready to go next year. It won't be able to make the big move this year, but you'd want to see a violent spike this year. And so you look at like, where would BlackBerry go? What are the targets? You're looking at 24.6. It touched it last year. Now it's on the 9. It broke the 9 yearly at 837. It retested it. Nice overextension. I think it would have a violent spike up to 24.6. Anything even close to this. But if you have a violent spike that goes from like, let's say 15 to above 24.6, you instantly sell it. Like I would say that that's the top of the memes. Whenever, wherever this happens, I would say that's the top of the memes. Unless it like goes up there, pulls back, and then breaks through it, okay, different. But like if it goes from like 15 to, and it goes straight above 24.6, I think that's a blow off top, and that should get rejected. That would be my target for this year. 24.6 for BlackBerry. Weekly, anything. Monthly. The 200 on the monthly is at 27.5, so that's another target. So yeah. People counting out the memes because they're raising rates and all this stuff, and this will define, okay? This will define if the meme stocks are a real thing. If this was the end of the meme stocks, this one and done, and this is just going to go down and to the right forever and ever until it dies. If that's the case, we are not in a market bubble. If this just dies, we are not in a market bubble, and the market will slowly and boringly and vomitly slowly just grind lower until PEs reevaluate themselves and everything goes nicey nice. And I don't think that's the case. I don't think that's the case. I think we are in a process of a asynchronous blow off top where the economy's going to accelerate and the market will go down and vice versa, and things will get better and things will get worse, and the stock market will, as one goes up, the other goes down, and then eventually both will go up and eventually both will go down. So we're in this really weird asynchronous matter because of everything that happened with COVID. The huge blow off bottom into the huge rally. Everything's kind of fucked, and then a huge bottom with the stimulus. So we shall see. Stay long GameStop. Expect the pop this year. Don't get faked out. We're looking for the DWOC spike and then see if this sells off on it, and then looking for the reversal off of it. Simple as that. If this gets crazy, congratulations. If it doesn't, don't fret. Don't think otherwise. I mean, GameStop's already at 150. AMC is only at 20. It's only at 20. AMC has like a lot more to go. AMC really needs to pump out here. And GameStop is already at 150. Like, pretty crazy. So that's that. This video was a little bit too long. 40 minutes. Holy shit. Oh no. What am I making, a movie? I think I need to cut some stuff out. All right. GG. Stay long. Have fun. And yeah. It's going to be a crazy year, an absolute crazy year, up and down. And there's a lot of money to be made. A lot. So fun. All right. GG.